Hi everyone, wish you a new successful financial year ahead. And with the end of the last month of the financial year, we are here with a market outlook. So the month of March was good for our markets. After prolonged correction of around 5-6 months, we saw upside in the markets across indexes. The large cap index as well as the small mid, they all were up, ranging from 6 to 12% from the recent bottoms. Also, we saw FIIs being net buyers for the month. We have seen unprecedented selling by foreign institutional investors, somewhere around 2 to 2.5 lakh crores since the month of October. But in the month of March, they were net buyers and as per data around last week of March, they were net buyers of around 11,000 crores. That was good turnaround. However, on global front, we saw correction in US markets. US markets struggled in the month of March, and in the recent US Fed meeting, we also heard from them that there are some slowdowns expected on US economy, and they expect the rate cuts in this calendar year to the tune of 0.5%. And if there's a slowdown and leading to rate cuts, that would help in boosting the liquidity in the global markets, and which will help the riskier assets like equity, etc. We have already seen action by our central bank in India, where the first rate cut is already done. Their expectation of the rate cut. The liquidity support will also come from the central bank, which should help our markets to grow in the coming months. Now, if we look at the valuations of our Indian markets, so the current PE of Nifty 500 is close to around 23.5. So, as per our estimates, is still overvalued by around 10%. However, within that, the large caps looks quite fairly valued, vis-a-vis the small and mid caps, where we still have some overvaluations, and we need to see how they shape up. So from equity buying perspective, the investors who have lower allocations on equity, they can go ahead and increase the allocations as per their asset allocation strategies. And whereas the investors who already have sufficient or the right allocation in equity, they can wait for further corrections and dips to enter and add more equity. The large caps, like we said, they are fairly valued and they look attractive at this point of time for investing from a long term, which is around 5 to 7 years perspective. And from a global investment perspective, the US markets, as they've corrected a bit, they're looking good from an investment as well as diversification perspective, especially the tech driven, your innovation driven sectors and stocks. And along with that, China also looks good with a recent stimulus from the government, as well as a story around tech innovations there. Germany is also looking good, where we have seen again a good amount of government stimulus, close to around 500 billion euro was came in from the government, and there's a good amount of focus towards infrastructure and defense there. So that should support the upside in Germany too. Along with that, if you look at gold and silver, they're looking good. Gold, because of the ongoing geopolitical tension, the gold has been rallying, and we expect this upside with more buying from the central banks, as well as buying in the gold ETFs, etc. And so we're bullish on a long-term perspective on gold too. And so gold allocations to gold and silver index funds can be done. With all this, the overall investor guidance is that their short-term volatility may continue. But however, from a long-term perspective, this could be a good time to invest, and from a 5 to 7 years horizon. So I hope you found this update interesting. I look forward to meet you soon for our portfolio and monthly reviews. Thank you.